Good morning, 11/10/2012. What do we have? We have the Philly Semiconductor Index called the SOX. And these are the names, and they're all chip stocks, and you can see the names in here. Economies don't do well when these are sold off. The chip sector in itself is what brings new technologies using various different chips. Their earnings through this quarterly earnings that we've experienced, a lot of these names have missed. And a lot of them have taken down their forecast based on their sales, their book to sell ratios, and how they're executing in each one of these companies. I will tell you though that this particular index, as many years, I've been around 30 years, ever since these indexes, these chip stocks, have to perform with the broader market to have stabilization. If these stocks continue to sell in the chip sector, that means that the economy is weaker. You have Obama in, you have fiscal cliff in, you have everything in, you have the earnings in these chip stocks are totally broke. You can see right over here that there are various different things. This was a 2012 rally up here. We sold off hard in the middle of the year. And here's that double bottom. And when the chip sector was going down, the rest of the market followed it. That's just the way it is. When the chips were rallying, the broader market followed. In other key sectors and other key indexes, they rally up when this rallies up. When this is back into a correction, I'm coming to a critical area called a 200-week moving average. This is very critical. It is in a bear. It is no longer a bull. Why? Because once again, when that 10-week moving average go down and you close 4 weeks below it, you can see how all of the broader chips fell. That means that all of the bellwether names, the leadership names in this index right here, you got the Broadcoms, you got the KLAC, you got the Intel's been a big drag on it. You've got AMAT in here, which has been a drag on it. I mean, this is the backbone. You got SanDisk in here, the flash memory, Texas Instruments, Xilinx. This is the Philadelphia SOX Index. This is the one that people pay attention to. This leads rallies up, and it also leads rallies, bear reversal rallies down. That's what we call a bear raid. And you're below, crossing over all the weekly moving averages. If this thing breaks the 200-week moving average or breaks this calendar year low, what will end up happening is this is the 2011 lows when we made all-time lows. But let's just take a look. Once we made those lows, the chips rallied big, and the broader market rallied right along with it. They lead rallies up, and they also, the broader market will follow these index right here for one reason. They're not making their earnings in there. And this is a bear. Chip stocks, all of them across the board, have been just sold down. Please be advised that if this breaks, the broader market goes with it. If we break the 2012 lows over here, we got a long ways to go down. 2010 over here, you can see how that chip sector led that rally up to the top of 2011. But you can see that when it had that big-ass weekly bear reversal all the way down here in 2011, until that put a bottom in, the markets never put a bottom in. So it's very understanding that the understanding is that you need to know that if this isn't doing well, then the broader markets are not going to do well. They're going to follow this. And there's a big correlation as to the economic picture when it comes to the semiconductors, because those are the people that are constantly redeveloping new technologies, putting chips, and I tell you what, this is one of the most crucial indexes in the broader indexes that we're going to be looking at. Bear reversal, major support is going to come into play. If we snap it, then that means that the rest of the indexes in the broader market go along with the Philadelphia SOX Index. Beware, mutual fund managers, hedge fund managers, And financial advisors, when you're looking at the video here and you're looking at what these things are about, you better understand that you can protect a portfolio by having put options on this index, because it has to perform and it has to hold support, because as we get weaker and weaker and weaker, we get more deeper in the bear reversal. The bull is not in there at the moment. The 10-week, all these weekly moving averages and crossovers and everything pointing down, with a 200-week moving average, if we get a weekly sell signal, look for the broader market to follow this particular index. That's why it's that crucial.